No one's talking about the banking crisis. No one, anywhere, any place. You're looking at the data here on the markets and what's going on. Gold. Oh, how about oil prices, huh? Brent crude took a big hit today. Brent crude is now selling for around $73 a barrel, down almost 5%. A couple of weeks ago, Brent was selling around $80 a barrel. It's going down because the markets are going down. And these are the facts.
In today's news recap, Chinese silver demand surges. Is this a calculated move? Gold demand in China has been strong this year, reflecting a broader movement of the yellow metal from the west to the east. But the Chinese aren't just accumulating gold. They have also been hoarding silver in recent months. The Shanghai Metals Exchange has reported a significant surge in silver volume, with prices consistently higher than Western exchanges. The price premium in China compared to the West has been as high as 10%. This signals an extremely strong demand for silver in China. Chinese silver imports have also surged, hitting a 3-year high of 390 tons last December. In June and July this year, imports broke through the 400-ton level. A year ago, import levels were half that, averaging in the 200-ton range. Last year, China held the second largest silver reserves in the world, trailing only Peru. Chinese reserves were reported at 71,000 tons. Peru, a major silver producer, had a silver stockpile of 98,000 tons. U.S. silver reserves were 23,000 tons, ranking 7th globally. If the Chinese can push the silver price higher, it could have major implications for the West, the Post reported. If the price of silver continues to rise, it could increase production costs for a wide range of industries, from electronics to solar panels. This could lead to higher consumer prices and a further slowdown of economic growth as China outproduces the West in electronics and solar panels. However, there is some indication the growth in Chinese solar panel production could go beyond market-driven demand. According to a recent Bloomberg report, the Chinese are producing solar panels at an excessive clip. There is some speculation that the Chinese are engaging in some low-level economic warfare, hoping to put the squeeze on Western economies. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Onto the markets. Not a good day. Labor Day, by the way. Labor Day? You know, we're plantation workers of Slavelandia. What labor? Labor Day. The chains own everything. And it's disgusting. You look at the data. You know, when I was a young guy, all the polls used to show that the future will be better than the past. And now it's the opposite. Because the big zone everything, Labor Day. Anyway, Slave Day. The markets, as we keep saying, things change after the summer holiday. And the summer holidays are over. And it hit the markets. NVIDIA plunges almost 10%, dragging basket of chip stocks to worst day since March 2020. Black Friday, he declared a state of emergency. Yeah. That's where the markets are right now. Everything was crashing. Knocked off almost $300 billion in market cap. But don't worry, they're still up 118%. And let's see, the Dow Jones fell 626 points, 1.51%. The S&P down over 2%. The NASDAQ down 3.26%. The market initially took the leg down Tuesday morning after two readings of manufacturing production showed sign of weakness. No fucking shit. Manufacturing production has been showing signs of weakness now for years. And not only in the United States, globally. S&P Global showed decline from July to August, while the Institute for Supply Management came in under the level anticipated by economists, gamblers. This data reignites concern around slowing growth with the U.S. economy. So, you think they're going to lower interest rates? You bet they are. And again, the lower interest rates fall, the deeper the dollar declines. And the deeper the dollar declines, the higher gold prices go up. Remember, top trend 2024, a golden year for gold. While others said this, no magazine in the world predicted the global golden year for gold, 2024.
In today's news recap, can Fed rate cut expectations sustain silver's uptrend? Silver prices rose buoyed by growing expectations that the Federal Reserve may initiate interest rate cuts as early as next month. This optimism, coupled with ongoing geopolitical tensions in the Middle East, helped lift silver despite a stronger U.S. dollar. Investors also remained focused on a slew of U.S. economic data set for release this week. Silver's upward movement on Thursday was primarily driven by weaker U.S. Treasury yields and increasing speculation that the Federal Reserve will cut interest rates soon. In addition to Fed rate cut speculation, traders are closely watching several key U.S. economic data releases, initial jobless claims, and second quarter gross domestic product figures, followed by pending home sales data later in the day. These indicators will be scrutinized for further clues on the state of the U.S. economy and the likelihood of the Fed easing monetary policy. However, concerns over weak Chinese demand for silver continue to linger in the background. China is a significant consumer of silver, particularly in industrial applications. Sluggish demand from China could potentially weigh on silver prices in the long term, even as investors focus on U.S. economic data and Fed policy. The recent softness in Chinese economic data has raised concerns about the sustainability of silver's current price levels. The release of the PCE price index on Friday is particularly critical, although analysts doubt it will significantly alter market expectations for the Fed's policy direction unless it deviates substantially from forecasts. It remains a crucial data point for traders. Looking ahead, silver appears resilient, especially in a low interest rate environment where it becomes more attractive as a non-yielding asset. However, the metal could face short-term pressure if upcoming economic data dampens expectations for a rate cut. Additionally, persistent concerns over weak demand from China may cap gains in the longer term, especially if the Chinese economy continues to struggle. Despite the dollar's recent gains, which typically weigh on silver, the prospect of lower U.S. interest rates has kept investor sentiment positive. Now we'll show you the best clips of the latest interview, but first, subscribe, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
No one's talking about the banking crisis. No one, anywhere, any place other than the Trends Journal. And when you're looking at the data here on the markets and what's going on, gold, how about oil prices, huh? Brent crude took a big hit today. Brent crude is now selling for around $73 a barrel, down almost 5%. A couple of weeks ago, Brent was selling around $80 a barrel. It's going down because the markets are going down. And these are the facts. This is the Financial Times today. Again, there's a global slowdown. That's why you're seeing Brent crude go down so low. This could be the beginning of a market crash. If the markets crash, Trump will win. If the equities stay around where they are, he won't. But remember, they're going to lower interest rates. And the lower interest rates fall, the deeper the dollar sinks and the higher gold prices go up. This is from Haaretz. Shin Bet chief warned Netanyahu of imminent war before October 7th. We've been saying this for how long? As I said, when all else fails, they take you to war. People forget. People forget the 39 weeks of protests that were going on in Israel because of his Judicial Reform Act. It would have kept him out of jail.
What do you think of Celente's predictions? Is he spot on? Do you disagree with him? Post in the comments section your honest opinion and share with the stackers if you're preparing for a major recession in the upcoming months. Now check this video right here and I'll see you on the other side.